Let's get some details surrounding these big falls. Chris Weston from IG joining us from Melbourne. Chris, good to see you there. Yeah, pretty dark days in global markets overnight, a very big risk-off move. How much further do you think this has to go?
Yeah, it's got a hallmarks that it could go a little bit further here, to be honest. We haven't seen any kind of signs that people want to step in and buy this market. I mean, we've seen trend breaks galore across a number of different asset classes over the last couple of days. The S&P, it has traded below that November 2012 uptrend, and that could be quite interesting. There's a chance that could even squeeze down to 1707, which would be the 200-day moving average. We've got the Dow trading for its 200-day moving average, and the S&P is just trading right on its lows at the moment. So, that's never good when a market trades from its highs and closes on its lows. It doesn't say a huge amount about the psychology of this market. Copper, if you look in that market, which of course we always do, that's down 9 days in a row now. I mean, it hasn't had a 10-day losing streak since 1995. If you look in the bond market as well, clearly people are not just looking at the lower growth profile caused by the ISM manufacturing number, which of course was very much largely weather related. But people are getting into the safe havens as well. I mean, emerging markets again smashed overnight. Brazil equity market down over 3%. All currencies against the yen. Emerging market currencies were down pretty heavily, to be honest. The best performing currency against the yen last night was the Romanian leu, but I'm not sure how much of a bearing that's going to have on our market, to be honest. But there's risk sentiment is clearly taking a back seat as well, and Japan as well is going to get absolutely hammered again today. And I think people are just buying protection where they can. I mean, if you look at the VIX, people are happy to continue buying that put protection. It's trading at 20% with the highest level since October as well. So I mean, the fact that people are coming back into the bond market, people are coming back into the VIX, it says to me that people are quite happy to protect themselves at the moment.
Is the data really that weak, though? I mean, the Fed speakers that we had seem to look through the data, seeming to say that there's obviously these weather impacts on it. I mean, what's your view on the US growth story now?
Yeah, well, I think that's a good point. The manufacture, if you look at the ISM manufacturing, if you look at the chairman who came out last night, he did say a large amount of it was down to weather. And we'll have to look very much in earnest at what happens with the February numbers, not just in the ISM manufacturing numbers, but Wednesday we get the service numbers, and they're going to be very important as well, because service sector is such a significantly bigger part of the economy in the US, and as well in most places around the world in the US economy. So that's going to be really interesting whether we see those weather-related patterns showing up in the service space as well. What I think, if you look at the vehicle sales numbers last night, if you look at the General Motors, they had a 12% decline in car sales and also light trucks, and that was down to weather as well. The employment numbers we saw last month were obviously particularly weak, and I think there's a whisper number going around the trading floors now that Friday's non-farm payrolls number will once again be affected by the weather-related patterns as well. What I think you've got to look at is with these manufacturing numbers today. I mean, if you look at the new order subcomponent, the forward-looking numbers, that dropped off an absolute cliff. The index went from 64 to 51.2, which was, I think, the weakest read against consensus since 2008. So the data hasn't been terrible. Let's not forget that. I mean, the ISM last night is still consistent with a growth number in the US of around 2.5%. But I think February's data series is going to be very, very important when that comes around.
So for our market then, what are you thinking? How steep are the losses going to be?
Yeah, like the SPY's telling a very clear picture that we're going to be down 1.92%. BHP's ADR down 1.5% at the moment, and really, if you're looking for volatility, look no further than the Nikkei. I mean, that's already in correctionary territory, well over 10%, and we're calling that down another 3% today, so 13% from the highs. And it is a volatile market, and that's one thing to look at. So that's going to be interesting. The whole of Asia looks like it's going to get absolutely pummeled today, which is never a good thing. But I think this is a clean out that we probably needed to have. Banks are going to get hit pretty hard, and you've got to feel sorry for companies like Downer and realestate.com who have to report in a day like today as well. It's they're going to have to do something pretty amazing to find buyers in this market today. Rate decision, I don't think it's going to be anything more than a currency story personally, but plenty of reasons to be relatively cautious, I think, and wait to see how this all plays out. But of course, a lot of people are going to be buying the lows on this market and hoping we get a bounce and try and be a hero. But right now there's a massive lack of clarity, and I'll just stand out and wait for some of this negative pessimism to sort of wave out of this market at the moment.
In terms of what you were saying there about Japan, our market too, obviously we've got a lot of those Asian markets closed because of the Lunar New Year. Does that just exacerbate the selling?
Well, I don't know actually, to be honest, Bridie. I think it's probably actually a good thing. I mean, I think we've got some more data coming out of China this week. I think the service numbers maybe still be very much in play, but you know, perhaps it's a good idea that China remains shut for now, and we get one less market to worry about, to be honest. But Japan's really what it's all about, and you know, they're in the midst of quarterly earnings season now. We've got names like Panasonic coming out, Kobe Steel. You know, there's some really big heavyweight companies coming out today, Toyota. Mitsubishi as well. So we've got to look at that side of things if you are sort of looking at the Japanese market and looking at it from a macro perspective and how that hits sentiment on our market as well. But yeah, I mean, that market is getting battered from pillar to post, and dollar yen traded through 101 last night, and we're seeing a big unwind of the carry trade, a lot of profit taking in that market. But I think most importantly, Japanese domestic players are repatriating funds back to Japan at a rate of knots at the moment, and given that Abenomics is partly premised on Japanese pension fund, life funds, retail punters basically buying foreign assets, you know, we are seeing an unwind of that, and that is a pretty scary phenomenon, to be honest. So China is closed, fine, but you know, we've got plenty to focus on both domestically and in Japan and other markets as well. So our market's still trading on a premium to the 5-year average, so it's still not cheap at these levels, and you know, we could potentially squeeze down to that low 5,000 level over the next week or so. Yeah, as I say, I'm just standing clear at the moment, and you know, I think people have been going to cash a little bit just until some sort of clarity prevails at the moment, because right now there isn't that clarity. There's a lot of questions being asked in this market, and when you do that, you get a natural the bids come out the market, and it's very easy for prices to fall.
What do you look for in particular, you know, when you are waiting for that clarity? I mean, is it, you know, the further read on the non-farm payrolls? Is it a Fed speaker? Is it, you know, a level on the S&P 500?
Well, I mean, I look at price action to start with, and you know, these markets at the moment are in free fall across the road, and I don't believe people should be looking to buy dips in this market. I mean, I wait for markets to stabilise and start moving higher, and we start getting a bit of confidence coming through in a more positive tape, and that's when I'll be looking to buy some of these markets. I mean, obviously there's individual equity stories which you're going to do very differently, and we always talk about an index, but you know, obviously there's stocks within an index which can perform very well in that time, and you know, should never disregard that. But if you're looking at a market, you've got to wait for, I personally wait for things to start stabilising a little bit more positive. What's going to cause the clarity? I think perhaps if we start seeing inflation fall in emerging markets, that will create a higher positive real yield in the emerging market space, make some of their bond markets slightly more attractive relative to developed markets, and curb some of the outflows. That could be quite positive as well. Perhaps some corporate earnings in Australia, if we get some companies coming out and saying, you know, regardless of the backdrop, what we're seeing at the moment, we're seeing really good trading conditions. That would be quite good as well. Especially we've got something like Fortescue, BHP and Rio saying, you know, forget about this slowdown in China. We still seem to be selling everything that we produce. That would be really positive from a macro perspective as well. So yeah, I think we're in corporate situation at the moment. We haven't heard anything from the US, which generally gives everyone backbone and confidence. But it'd be quite good here in Australia to get some confidence from some of these CEOs and hear that they're in a good trading space at the moment.
Yeah, Chris, look, thank you so much for that. We'll be hanging on to our seats today, that's for sure. Thank you.